100 years ago, you could pay your hotel bill by handing some cash to the clerk at the front desk. Today, that quick personal exchange has morphed into a maze of payment networks, middlemen, and tech. Paying for a room has become one of the messiest parts of travel transactions. Let's break down why it's such a mess and what it will take to clean it up. Hotel payments might seem simple. A guest clicks book on the website and the hotel gets paid. But in reality, the money winds through a multi-step process shaped by the hospitality industry's unique features: fragmented landscape, uneven payment timelines, and post-stay bill adjustments. Hospitality is one of the most fragmented areas of the travel world. In Europe, around 77% of hotels are independent. Many of them are small, family-run properties that lean on local banks and outdated systems. In the US, independent hotels still represent 1/3 of the market. But even when you see a well-known logo, there's only a slim chance that the building actually belongs to the global brand. Most probably, the chain only supplies marketing and guidelines, while the real owner chooses tech and payment setup. That's why even the same hotel name may give you two very different payment experiences in Europe and the US.
If you compare hotel payments to, say, maybe airlines or another major travel sector, they differ quite a bit because the airlines are large and have all of the payment workflows that have been orchestrated for decades in many cases, and so those are pretty well established.
Tony Vardaman is Vice President of Global Payments and Operations at Cloudbeds, a cloud-based hospitality management platform. The picture gets even more complicated because there's no one-size-fits-all rule for when a hotel gets paid. While airlines require full payment for a seat before they issue tickets, hotels collect money for a stay at different times. It can be well in advance of the guest's arrival, during check-in, or at checkout. Traditionally, hotels charged guests right before departure, yet today it's changing. More and more accommodation providers want to be paid in advance.
What we've seen in the past few years, particularly since COVID, is hotels want more of the funds up front. You see it differently in the corporate travel market, where typically corporate travelers are traveling on more flexible types of bookings, where they can make changes right up until the day of departure. But on the leisure market, it's now normal for travelers to have paid for their whole trip up front.
Nicole Wilcock is head of commercial partnerships at Neum, a real-time global payments platform serving OTAs, hotels, and airlines. Even if a room is prepaid, the cost may change by the time of checkout, which is another distinctive trait of hospitality. During their stay, guests might order room service, upgrade their room, or accidentally damage something, all of which contribute to the final bill.
So it may be that the price agreed at the point of booking the holiday is €500. That can change if the customer then decides to extend their holiday. They may decide to add additional features onto the room, additional services, upgrade the room. All of those things can change through the process.
Gordon Mitchell is account director at Modular, an all-in-one platform for daily business payments. To ensure all expenses and potential losses are covered, hotels mainly rely on credit and debit cards that support pre-authorization, meaning they can temporarily hold a certain amount of money. These distinct characteristics of the hotel industry impact both B2C payments between guests and hotels and B2B payments between hotels and their business partners. In our video, we'll look into each flow in detail. So, what's happening on the B2C level? Travelers are used to smooth payments with services like Uber or big OTAs like Booking.com. So, when it comes to hotels, they expect the same level of convenience, but often they're left disappointed right from the online booking stage. Did you know travelers actually spend more when they book directly on a hotel's website? They go for better rooms, stay longer, and grab more extras, bringing the average booking value to $519. Now compare that to reservations through OTAs, which average about $320, or through wholesalers and tour operators, which come in around $446. Big difference, right? Unfortunately, hotels often lose these high-value direct bookings, all because of a subpar payment experience. Common frictions include card declines, requests to share card details via phone, and especially the inability to use the preferred payment method. A report by payment gateway provider Adyen shows that 37% of travelers abandon the booking process if they can't pay the way they want. Imagine you use Apple Pay for everything, from socks to flight tickets. But when it's time to book a room online at a 5-star hotel, it suddenly doesn't work. This problem has two sides. On the technical side, the property may use a local payment processor and property management system that just can't accept the chosen method. Another factor is that digital wallets and other alternative methods act more like cash. They're great for secure payments, but not for things like no-show protection or security deposits, since they don't support temporary money holds. So, hotels often insist on credit cards, especially at the booking stage, and that's where frustration kicks in. Many travelers end up going with a more flexible competitor or book through an OTA that accepts pretty much everything. Often, hotels don't process online payments at all. You book a room on the brand's website, it collects your card details and passes them to the property for verification and pre-authorization. And the actual payment? It happens later, at the front desk. Even if guests enter their credit card details when booking online or prepay through an OTA using a digital wallet, that doesn't mean they can leave their physical card at home. More often than not, hotels still require the plastic at check-in. The front desk needs to verify a few things: that you're really you, the card is valid, and there's enough money available to cover incidentals. They'll typically place a hold, also known as pre-authorization, on your account. What amount is frozen? Some hotels lock a flat amount, like $100, while others hold a percentage of the total booking. After that, many places let you enjoy other payment methods like Apple Pay or Google Pay during your stay or at checkout. But it really depends on the hotel. If they're using a local bank terminal that doesn't support wallets, well, forget about it. No matter what, the bill is finalized before the guest departs. If no extra fees apply, the pre-authorized amount is released within a few business days. But if someone skips out after trashing the room, breaking the TV, and emptying the minibar, the hotel can still charge for damages. What can hotels do to improve the overall payment experience? First, move from the archaic on-premises PMS to an online system. Second, make sure the new PMS has payment processes embedded directly into it.
So when you sign up for one of these modern PMSs and they have payments inside of it, all you have to do is sign up for a merchant account through that provider, whether it's Adyen or Stripe or dLocal or one of the others. And once you have that merchant account, then all your payments are flowing through the PMS and you don't have to touch those cards anymore, because the booking engine will take it automatically. The pay by link, if you need to send one of those, automatically takes it. And even if you do have to take a card physically for some reason, if you're having to type it into the PMS, immediately when you type it into the PMS, it then tokenizes it and removes that card number from site.
But guest payments are only half the story. Hotels still need to settle with their distribution partners. It's time to talk about B2B payments. The relationship between suppliers and resellers can be broadly categorized into two models: the merchant model and the agency model. Let's begin with payments in the merchant model, which is becoming increasingly popular among OTAs. In the merchant model, the guest pays upfront to a reseller, who handles the transaction, keeps a markup, and then sends the hotel the agreed amount. Things can get trickier with more intermediaries, like bed banks, stepping in. But overall, two payment methods lead the way: bank transfers and credit cards, especially virtual credit cards.
We see with our customers that the share of the virtual card market is growing. It offers good security from a travel agency perspective, and also for the hotel's perspective. It's easier to reconcile. It helps in terms of cash flow. And there's a revenue stream, particularly for the travel agencies. But a lot of hotels, depending on the size and where they're located, they prefer to be paid by bank transfer.
The main advantage of bank transfers is their low cost of acceptance. They're ideal for bulk payments and large sums that might exceed credit or debit card limits. However, there's usually a delay in receiving the funds, so the hotel has to wait longer for payment. Additionally, like digital wallets and other B2C payment methods, bank transfers don't offer payment guarantees or a pre-authorization process. This is where virtual cards truly stand out.
You can create a card that can be used for a certain period of time only, and can be used only for an amount that was pre-agreed with the hotel. Now that can be moved and flexed as the agreement changes, so via APIs. If the hotel has agreed with the travel intermediary that they are going to increase the length of the stay, they're going to increase the quality of the room, etc. They can send a message through the API to the travel intermediary, and they can increase or decrease the value of that card as required.
It's hard to believe, but not long ago, the most widely used way to send card details from a reseller to a hotel to guarantee a booking was via fax machine. Fax transmission still accounts for 3% of virtual card transactions. Of course, this is far from modern security standards. Someone can walk past reception and just pull up the fax with card details on it. So today, the default method for sending such highly sensitive information is via API.
The bigger the hotel, if it's part of a chain, or if they're a smaller hotel that are using a technology provider, then typically the payment process is quite automated. They're integrated with APIs so that the cards can be issued automatically by the travel agency, and then the hotel receives the information in a very efficient way. But there are still lots of small hotels who don't have the technical expertise in-house, or they may find the cost too high in order to build the API integration. So card details can also be shared securely through portals and by cards being generated manually.
At the same time, there should be a balance between security and convenience. If the card system is highly protected but too complicated, hotels may reject it.
You make a card super secure but impossible to use, so the hotels aren't going to use that. They're only going to try a couple of times, and if it's really clunky and there's a lot of friction in getting to the card number, they will just stop using that card product and they will go and ask for another type of payment. So it's got to be security that works for both parties, but also doesn't add unnecessary friction to the process.
While B2B payments in the merchant model heavily rely on virtual cards, the same can't be said about the agency model, where hotels pay commissions to resellers, at least for now. The agency or commission model is an immortal classic of hospitality. In this setup, the reseller matches a traveler with an accommodation, collects card details, and sends them to the hotel. The hotel charges the card either at the time of booking, at check-in, or on departure, and pays the agreed commission to the agency after checkout. And the actual form of payment will vary from market to market.
So I would say that most of the current payment systems are present in the world of hotel commissions. It really depends more of the local market and what's common there. Checks, for instance, is still a large part of the US payment systems, although in Europe we don't see them anymore. But I would say that the primary method of payment are electronic payment systems, such as ACH or SEPA or other regional electronic payment systems. From an international payment perspective, that is still dominated by wire transfers.
Knut Erik Reef is Vice President of Product at Onyx CenterSource, a technology provider for B2B payments in hospitality.
We do, however, see VCC, virtual credit cards, and digital payment wallets as upcoming trends, I'd say. It's not taking significant market share, especially not from our point of view just yet, but they are on the rise.
No matter what the method is, commission payments don't happen immediately upon a guest's departure. Consider one commission payment, which is 10 to 30% of the booking price. Imagine that it was a couple of nights stay and money should be sent cross-border from Singapore to New York. It doesn't make sense because of the costs involved. That's why hotels aggregate commissions owed to resellers over a set period, reducing bank fees and other expenses. How long do travel agencies wait for their payments? According to data from Onyx CenterSource, payment timelines vary significantly depending on the level of centralization. Large hotel chains with uniform processes across all properties typically pay their partners within 35 days after guest checkout. However, if the hotel chain funds commissions individually through each property rather than centrally, the average payment timeline extends to 42 days. For managed or franchised properties, payments take around 56 days, while independent or boutique hotels have the longest delay with an average of 58 days. Commission payments are pretty complicated, so it's common for both hotels and resellers to outsource commission management to third parties who handle collecting, distributing, and reconciling payments. But hoteliers can still do some homework on their end to keep their brand reputation strong and maintain great partnerships.
I think from a hotel perspective, it's very important to make sure that your commission policy is known and that it's straightforward, right? It doesn't have a lot of complexity with it. The easier it is, the easier it is for everyone to understand, and for the right expectations to be set across the value chain.
Hotel payments are never going to be a walk in the park. Experts agree that we won't see a world where all hotels are connected to a single chain with unified transactions. Hospitality just doesn't work that way. The ecosystem will remain fragmented, but by choosing the technologies and payment partners integrated with global systems, centralizing processes, and focusing on the guest experience, hotels can drive significant improvements.
The hospitality industry is an art form. It's not just a business, but it's one of the last kind of industries where technology is not seen as the core piece of delivering that service. But if you are a hotelier, you need to ask yourself what kind of traveler is coming to your location. Are they the aging population, the baby boomer population, or a more elderly population, or is it starting to skew towards the younger millennial crowd? And millennials and younger are going to expect everything to be seamless and everything to be done online. And I think the hotelier needs to be ready to make those changes.
Curious about how hotels and other travel businesses can tailor their payment strategies to attract more customers? Check out our video on local payment methods. And remember to follow our payment series. We've got a lot more to cover and simplify.